Good afternoon, everyone. My name is Tony Russo. I am the editor of Funeral Service Insider and the host of the Funeral Service Insider, the podcast. We put out shows every other Monday, many Wednesdays, and every Friday we have this in case you missed it news update, which we'd love you to catch because it's fun to do and people seem to be enjoying it. We're getting ready to start the presentation here in a little bit. Before we do, want to kind of introduce how the process works if you're new here. There is a question box on your control panel. If you have any questions, just throw them in there. I will ask the questions as the presentation goes along. I'm going to stay on screen and ask some questions of the presenter as well. One of the important things to think about is this is not going to be a 2-hour presentation. This presentation may last about 45 minutes. It could go an hour. That is also going to depend upon how many questions. We can stay as long as we want. And I've been asked to remind you, I didn't have to be asked because it makes sense to me. There's not a lot of opportunities you have to ask direct questions to a banker who's already in your business. So if you have questions that you'd like to ask a banker, this is a good time to do it. So if we are all ready, I am going to present Teresa Carlson, Vice President and Business Development Officer at the Bank Corp Small Lending. Warren, welcome. Good afternoon.
Great. Well, good morning, everyone. I'm sorry we can't all see each other's faces, so it seems a little odd, actually. I feel like I'm just talking into the unknown. So I do encourage you, as Tony said, please ask questions. It's an opportunity here to kind of get some free banking advice, everyone. So I'm here to provide some details in regards to succession planning and also various financing opportunities that are available out there for you. And then just kind of get into the weeds of some case studies and kind of take you down a couple of scenarios. I think that will be really enlightening. So if you could go to the next slide, guys, we'll go ahead and just jump right in it. Everyone's pretty busy, so we'll make this pretty concise. But again, please, let's ask questions. You signed up for a reason, so let's take all the time you need. I'm here for 2 hours. We don't have to take 2 hours, but I do really encourage you guys to do so. We're going to get started here with my first slide is it's going to get into some understanding some financial challenges. Tony had a direct question that I wanted to answer here. He and I were kind of conversing back and forth, and it was one question that we thought would be a good one to ask. He had it, so I will let you ask, Tony.
Sure. So when you guys announced it was a couple of years ago now the goodwill, adding goodwill into loans. I think it's awesome, but I don't understand at all like what that even means. So can you
No,
tell me what
yeah,
it means, how you decided to do it, and how it works?
sounds great. Sounds great. So it's actually going on 3 years now, Tony. So I am an SBA lender from the beginning. I've been doing SBA lending for many, many years in the space of funeral for about, oh my gosh, guys, like 11 years now, specifically lending. And what I found out about 3 years ago is I was kind of running into limitations for lending. Like I could only go up to 5 million, and then I was running out of space. Honestly, I was getting some requests for transactions over 5 million, and it's like, how do we solve for this? Our independent funeral homeowners, they need access to capital, and it was just getting so hard for them. And I was getting as creative as I could, but I have my own limitations as a bank. And then on a June 3 years ago in the summer, I got a call from the CEO and president and chairman of Homesteaders Life Company, Steve Schaefer. He called and said, "Hey, listen, we want to get into lending. We need a vehicle." And I said, "Well, that's great because I need a vehicle too. I need to expand my lending opportunities for my independent funeral homeowners. And what can we do?" So he's like, "Hey, listen, I have an idea." And I said, "Well, I have one too." And I presented mine to my bank, and they're like, "Well, go find a partner." So what we did was we came up with a conventional loan product, non-SBA. It'll take you up to 20, 30 million. And what it does is that it really solved for goodwill. And what I mean by that is most funeral homes, they have their real estate, they have their actual funeral home. But the business is more than that. It's not driven by real estate, it's driven by cash flow. And when you have cash flow, that's where you get this enterprise value. and you gain goodwill. So there's a real estate component and there's a goodwill component in any funeral home. And when you're doing refinances or you're buying one, all of this goodwill component comes into play. The problem is that you can't figure out what to do with it. And I think sometimes lenders had this really hard time because it's what they call blue sky. It's basically cash. So
Mm.
what do we do with this? How do we finance goodwill? And there is goodwill in funeral industry. As you can imagine, our owners are dealing with families in their absolute worst times of their lives. Like this is not a joyful occasion. So, they have to not only deal with the families, right, but they have to build this camaraderie. They build themselves in the community. They're working with hospice and hospitals and the fire department, the police department. They're involved in their community, and with that comes that goodwill. And not anybody can just walk into a funeral home and start running it. You can't go live in Pittsburgh and come to California and start running a funeral home. That's just not how it works. You need to have that basis, that goodwill foundation, and that's what exists in every funeral home across the US. So we talked about it and we said, listen, let's figure out how can we participate and do lending together so that we kind of exceed what SBA can give me, get into goodwill financing and real estate, of course, and just see what it does. So we launched the product 3 years ago, and I am so excited to tell you in 2024, we did $100 million back into the market, brought access to capital for all funeral home owners nationwide. And it's been going so great and really providing a product that's getting them to the next level, whether it be partner buyouts, refinances, purchase, you name it. It'll do all kinds of different things. So I still do SBA lending, of course, but I do both. So that's kind of been the biggest game changer in regards to what these challenges that these owners have, and what does it mean to kind of keep going, right, and growing? Because if you're not growing, you're just kind of stagnant. You're just kind of hanging there. And every small business in the U.S. wants to grow. So that's kind of our background of how it all got started.
I want to ask only because is it just goodwill? I know it may just be a case by case basis, but is it like a broad percentage? Is it like, how do I know what my likely goodwill would be if
Yeah,
I wanted to expand? Like, is it
yeah,
worth even asking, or is it,
yeah. No. That's a great question. It's usually about a 60-40, 70-30 split, meaning 60%, 70% real estate. The rest is kind of goodwill. A couple things that we do is we'll do an appraisal, a real estate appraisal, to kind of figure out what that number is. And then there are great companies out there that will do business valuations for us that are really specific to funeral homes. You can't just hire anyone to do these types of things. So we
right?
really work with owners to kind of get these types of reports done. And that way they really know what they're getting themselves into.
Hmm,
Mhm. Good question. Good
excellent.
question. Yep.
And
Let's see.
I don't want this to
Oh,
be too much of a softball, but I
yeah.
think one of the things is that this isn't, and I'm sorry, you also warned me not to ask
Yeah.
about the local banks, but this is something you need a specialist to do.
Yeah.
This is not something that is widely available, right?
Yeah. Right.
All right,
That's
just making
correct.
sure.
That's correct. So, I always I use this example of, my knee, I hurt my knee, right? So I'm like, oh, God, my knee's really hurting. I need to go see a GP. So I go see the GP and he's like, well, he kind of him hugs. It kind of gives me a little bit of idea of what he thinks is wrong with my knee, right? But in the end of the day, I need to go see an ortho. I need to see
Mm, I
an
see.
orthopedic, right? At the end of the day, that's what I need to be doing. That's exactly what's happening in our funeral profession. You need a specialist. You need to go to a lender that understands your business, period. It's literally as simple as that. It's like finding the right doctor. You got to find the right lender, because if
I
you
see.
don't understand the funeral profession and what these challenges are in all the different intricacy of each home, demographic, where is it, rural, is it urban, I mean, it goes into all these details, and
Right.
case volume, cremation, I mean, there's all kinds of questions, right, you have to ask. But if, respectfully, most local lenders, they don't know that, they just don't do enough funerals. So respectfully, they do great work. They offer great loans, deposits, merchant card services, all these great kind of local services are fantastic. But when it comes to kind of large lending, or doing a refinance, and understanding that their collateral is not going to cover the entire loan, it's mind boggling for them. they can't quite get their head around it. They're like, well, we're underwater. I'm underwater on most deals. I'm completely fine with that because I already
That's the
know,
plan.
my owners have great enterprise value or what we call goodwill value, and that's okay with me. I'm fine with that. So I really do specialize in it. Most of my book is, I mean, Tony, I probably do 99% funeral, and occasionally I'll do other loans, various loans that people that have contacted me, great old friends, stuff like that to do outside of funeral. But I do specialize in that. And it is key. Owners that are listening in right now, you have to connect yourself. Find a lender that understands funeral, really understands. If they're not asking questions about call volume, cremation versus traditional, direct cremation, I mean, all of these different terminologies that we all know, right? We chat about it all day long. If they're not asking those questions, they're not going to understand the business. And they're just going to lead you down a road of like, well, we want to do the real estate, but everything else, you're going to have to figure it out on your own.
Right.
That's not a solution. They're kind of pushing it back on the owner, right? Like, well, you go figure it out and come back to me. No, it's not a lender.
And along those lines, this isn't, I mean, this is a succession webinar, but this isn't exclusively a succession product, right?
No, it is not. It's key for succession planning. It does great things for that, but it does a lot of other things, refinancing, expansion, purchasing. You can purchase 1, 2, 5, whatever the case may be. We're gonna really work with you to figure out what is the best product for you, what is the most cost efficient. I pride myself, Tony. I don't lend money to people that don't need it. Like, why would I do
Right.
that? Right? Don't borrow money you don't need. Owners, listen, do not borrow money you don't need because at the end of the day, it's just more debt. And so our key is to put you in the most cost efficient loan that makes financial sense for you going forward. I want you to come back and say, oh my God, I found something else I want to do. It's like, great, let's do it. Right. But we prepared
Right.
for it. We didn't get you in some ridiculous loan that doesn't make sense at all. So I pride myself in not lending money you don't need. So
Excellent. Thank you.
sure, sure. Let's go ahead and go on to the next slide. This is a bit of an agenda slide, and I'll just give you a little 5-second thing about myself, guys. I think it's important to get to know, who you're working with and so forth. So I grew up in California, Tony, and in the Central Valley, right in the middle of California. But I've lived in Los Angeles for 25 years. I got married 25 years ago. I lived there like 2 more months, and then we moved. So my parents were thrilled, my husband, for moving me away. So uh, I have 3 children. I graduated from Fresno State and got my degree in business law. But as it turns out, I ended up being a finance person. So who knows, where your life leads you. But I'm having so much fun in the industry. People are so gracious with me and letting me be, part of their lives. And when you're dealing with money, it's tricky, it's sticky, it can get messy. And so I try to really kind of become friends with these people, really understand what they need so that they're comfortable telling me. If you can't tell me what's going on, I can't help you.
Yeah.
So that's one thing. My parents were small business owners also. So I remember going to a bank with my parents, and I was much younger, obviously, and they looked uncomfortable. Like I literally remember them, and they were uncomfortable, and I'm like, what are we doing here? Like, I didn't know, right? I mean, I'm like I don't know, a sophomore in high school, completely clueless. But I remember thinking later on, now that I look back at it, that, they had a catering business and they wanted to buy a building, but, they didn't really know the first thing about how to go about doing that. And I feel that sometimes my funeral homeowners feel the same way. They don't really know how to get started. They don't really know what questions to ask. They feel if they go to their local bank that everybody in town is going to know what they're doing, right? Or that they're
Right.
in trouble, right? And they're not in trouble. They're thinking of expanding. They're going to add an event center, change the chapel, or whatever. But I feel like that's probably been the biggest problem with small businesses, that they don't know how to get started.
Yeah.
And honestly, you guys, it's have a conversation. That's all it is. Ask questions, and no question is a wrong one. It just opens doors like you would not believe. So that's just a little bit about myself, guys. I hope that was informative. So we can
It's
go to the next
interesting.
slide real quick. Go ahead.
It's
Sorry, Tony.
interesting that you're uncomfortable at the bank and you're also uncomfortable in an arrangement conference. So it's like a turnabout is fair play kind of
It
position.
is. It is. I remember that, that memory, and I have that memory. That's what I always try to, have my owners like, tell me about your business. Everybody wants to talk about they have a lot of pride, of course, so much pride about everything that they've built. Some have been handed down, right? But they've had
Mhm.
to kind of continue on. They're third, fourth generation funeral homeowners, but everyone needs to have the opportunity to kind of tell their story. And I think if you don't pause and listen to those stories, you're not going to understand what they're needing. And it's all about the need at the end of the day. So,
Right.
yeah.
Um, and how do you know that you're ready to do this? Like when and actually this is someone just asked this question, so let me ask this question instead.
Please.
How frequently should I be valuating my business in preparation for selling or retiring? And I'm
Great
sure we'll
question.
get there, but if you're ready for
Yeah,
that
no,
now,
I love it.
we'll talk
Yeah.
about it now.
We can, I know, I love that. I love pausing for some questions, guys. I want it to be an interactive type situation. That is a fantastic question. Probably every 3 to 4 years is plenty. I think most people have never done it, literally, the entire time they've been open. They haven't actually thought it through to get that information. So a couple things. One, we definitely want to know what the real estate value is. Something in lending, guys, to understand is it becomes the driver of the loan. The real estate does. And I apologize. The What happens with the real estate is it drives the loan structure. So this is a perfect example to
Mhm.
whomever asked the question. Let's say the real estate's worth, let's just use easy numbers, is worth $1 million. Most banks will lend anywhere from 70 to 85% of that number. So let's use 85%, which is what I do. So I'll lend 850,000 against the million, right? So now we have to solve for the difference. And that difference becomes goodwill. We're going to start pushing it into this goodwill category. I kind of categorize my loans into the real estate value, the goodwill value, and what I need to kind of solve for financing. But keep in mind, guys, there's also for the person buying you or the partner buying you, there's working capital we need to account for, closing costs of this loan, because the loan is going to cost you fees, title fees, report fees, various things, right? We'll lump those things.
Yeah.
But what we need to figure out as owners, it's like, okay, I kind of want to be done, right? In 5 years. Maybe I want to work part-time. Maybe not. Maybe I just want to go to Florida, depending on what it is. Most go to Florida. I don't know why, but most people, but you could come to California. It's great here too, guys. The weather's nice, no humidity. So keep in mind, those things are what we want to do is prepare you. So, how to do that? You've got to get an appraisal report done by someone who understands what they're valuing, right? We don't want some, look, guys, make investments. Anything is an investment, especially in your business, right? And information is key. If you don't have the information, right? If you don't have proper reporting, you don't know where the money is, you're not watching your business. Not only is it you're watching the front door and these people coming in to do services, you need to be watching admin and what am I doing, right? What all the administrative things that I need to be watching. So all of that comes into, technology, software, right? Getting things in order because the person that's buying you, they're going to be peppering you with all the questions I'm doing right now. Like, what's the software?
Mm.
What's the accounting? Are the books in order? You know, that type of thing. Are taxes being filed on time? So reports are fantastic to get, appraisal and a business valuation report. And you all are more than welcome to give me a call. I'm happy to order things for you. No obligation whatsoever. I do it all the time for my owners. They're like, Teresa, I'm like 5 years down the road. I'm like, no problem. I will put you in contact with an appraisal person that actually knows how to do a funeral home. And I'll
Right.
put you in contact with a company that can do a business valuation that are qualified to do funeral. If you don't know how to do funeral, don't hire them. It's that simple. So surround yourself with the experts, guys. That's worth the money. I promise you. That's a great question.
And I guess along those lines, what other kind of paperwork should people expect to have with them, when
Oh,
it's time?
excellent question. Yeah. So 3 years tax returns, it's really just 4 items, guys. 3 years tax returns. So at this point, we're in a kind of a weird stage right now because none of us have filed our taxes. It's okay to do extension, guys. Don't feel like you can't, but 3 years tax returns would be 23, 22, and 21 as an example for this time of year. And then I would actually need you to do year end 2024. So those are that's it. Oh, sorry, 5 things. Call volume, super important, categorized out too. You really want to be able to show, here's my call volume, 400, whatever the number is. of that number, I did this in traditional, I did this in cremation with services, I did this with direct cremation, no service. You can kind of go through that whole thing. And it's important to know these things in detail. I mean, if you don't know all these things, get in there and figure it out. Get all this information together and really take the time. Tony, that's probably one of the hardest things for funeral homeowners. They're running their businesses with their families and they really don't make this time. So
Well,
hire somebody.
but I would expect, and this a genuine question from me.
Yeah.
You would expect that people are following these trends. Like people should know what's trending in their own business. That's just not always the case, I guess.
Not all the time. And
Wow.
it's not for lack of wanting.
Yeah,
It's
yeah.
just that they're so busy. Truly, they're so busy. It's just like us in our day to day, right? I have a laundry list of stuff I haven't done,
Right.
literally. But I'm busy with my work. I'm doing my loans. I'm raising a 17-year-old daughter. I got all kinds of stuff. They have the exact same things, right? Plus they're dealing with families and they're like running around doing services, cemetery. Oh, I got to go to the cremation thing. Oh, I got to go get the
Yeah.
death certificate. And it just goes on and on. So sometimes it's like, oh, I'll get to it. I'll get to it. But it just gets pushed and pushed and pushed, right? So it's not for lack of trying, truly. It's just pausing and saying, I need to do these things. I need to order these reports and make this $10,000 investment. Sometimes it's 10, guys. It could be $4,000 or $3,000 to $4,000 for an appraisal and about $2,500 for a business valuation, right? The problem is you want to order those reports, but then you actually have to give information. So you got to get the financial information to give it to the business valuation person to get you the report. So that is where it's like, take the time, make an appointment with your accountant and say, I need these items. Figure it out, give them to me. I know you probably gave them to me in the past. I don't care. Give them to me again. Like lean on your vendors, guys. They're there for a reason. They really are. And sometimes I feel like they don't want to bother the accountant. Bother them. They're your client. You're the client. So I bother mine all the time. I'm like, I can't find this. Just send it to me again, right? So sometimes I think that, it's a little bit of they don't want to bother people. Bother them. Ask questions. Get people
Mm,
to help you and get this information in front of you so that you can really get your arms around what does the future hold in the next 3 to 5 years. So I hope that was helpful.
excellent. Oh, I'm sorry. Yes, please continue.
No worries, no worries. Okay, well, we talked about so a couple things about this particular slide I wanted to just kind of touch base on. Limited cash flow. Oh, that's a doozy. So, sometimes there are hard times, death rate is death rate, right? So it's not for people like, oh, well, I, took my eye off the ball and I lost market share. Not necessarily. Death rate is death rate. And sometimes they're going to be lower than other years, right? I believe personally that we're finally over this post-COVID thing. We are in COVID. Things are like this. Then it kind of came down a little bit. Well, it's post-COVID. People that should have died in 23 died in 20. It's a whole thing. In 24, I feel like we're seeing what 2019 was. I think that's fair to say. But based on the financial information I'm getting from borrowers, I'm kind of seeing, that, okay, we're kind of back to where we were in 19 and 24, right?
Mhm. Yeah.
20, you got to dismiss it, which is another issue I think that lenders have. They're like, why do they have dip in revenue? It's like, it was COVID. You have like it, right? But I can explain that because I do so much funeral book that I can explain that to them.
Right.
Like it's post COVID. Like I'm sorry, but yeah, we lived through a pandemic and we all thought it wouldn't happen and it did, brings me to cash flow. That rainy day, it actually came, right? Pandemic came. No one saw it coming. And if you didn't prepare for rainy day, you were struggling. Definitely, right? So cash flow is key. If you have high interest rate loans because at the time you needed to make that deal, you needed to make that purchase, whatever the situation was, there's no fault there. I mean, sometimes you have to make a decision. You have to take that deal because it's not going to be there, right? Funeral homes don't just come up for sale all the time, Tony. Like, well, if I don't buy it this year, I'll buy it in a couple of years. No, you don't buy it now, it's gone, right? They don't transition that
20
much.
years. Yeah.
Right, right. It's not like a C-store gas station. Sometimes they kind of flip, right? Or
Or
various industries
restaurant.
have.
You'll
Oh
you'll
my
get
gosh,
another chance at a
restaurant.
restaurant in 18 months. Yeah.
Yeah. Nobody buy a restaurant on this call. If you ever have an idea to go buy one, don't. Stick with what you know. That is so key. Anyways, let's not get off tangent on a wrong tangent. But one thing I do want to say though, that this lack of understanding, like this reduction of cash flow and all of that, I think for me, I want people to understand, like, pause for a second, take a look at your debt, outline that debt. Okay, by what is it? What was the original amount, right? What's the amount now? What are the interest rates? When are they coming due? Some might balloon, some may not, right? And then let's have a conversation, because in one of the slides downstream on this webinar, we're going to see one that blew this person's mind. This is a real test case, a real case. I've actually funded this deal, guys. So nothing you see here is just a what if. This is actual deals that I've closed, and it is absolutely enlightening. And what I mean by limited cash flow is, like, doing these types of refis, or even taking time to kind of look at this stuff. We want to improve cash flow because we want to build that base. Not that a pandemic's going to happen again. I'm not being that ridiculous, but what I'm saying is, you know, something happened. Oh God, the roof needs to be repaired. No, not repaired. It needs to actually be replaced. Okay, now what? Right? You
Mm.
have to prepare for those things, guys. The furnace, I get these calls all the time. The crematory literally died. It's down for how many days? We don't know, right? Could be down a month. Now they're outsourcing. So they've lost money because they had to outsource the cremation until they can get their machine up and going. It is endless of kind of like obstacles these people have. And the key is to have cash. You have to have cash on hand, guys, not just to run day to day, that rainy day, that little fund, it needs to exist. And the way to do that is to kind of fix things financially, get your cash flow improved, and just sit tight. That that's my best advice for you guys in regards to kind of like, fixing this limited cash flow issue that a lot of people have.
Excellent. Thank you.
Yeah. Yeah, no worries. We talked about high interest rate and access to capital. We've kind of covered that kind of stuff with our chattiness. So let's go to the next slide. All right. Well, our webinar really, guys, today was really for succession planning. I hope that it was informative so far, some of the conversations Tony and I have been having, but I do want to touch base on this kind of key in, because I think people have signed up to really kind of understand what this is. The financial considerations for ownership transition. So the one thing that I want to kind of cover with that, it sounds very banky, I apologize, but what it really means is that, okay, going forward, if you want to sell or to your partner, let's say there's a partner that exists, or you want to just sell in general, guys, like, in 5 years, Teresa, I want to sell. I want to be on my way to Florida. Okay. Do you want all the money up front, or do you want to carry some of it back? And what I mean by carry back is, do you want me to give you a loan, give the buyer a loan for, let's use easy numbers. Let's say your sale is $5 million, but it's like, okay, well, I only want 4 up front, right? Because there's tax problems involved with that. You got to work with your accountant, kind of run scenarios. So what happens is, I'll do a loan for 4 million, meaning you're going to literally be on your way to Florida with your 4 million bucks, but then you're going to leave $1 million on the table. And what I mean by that is, there's a note now from you to the new owners, and they're going to pay you whatever over 5 years, so that you're not hit with the tax on that. You're only going to get hit with the tax on the $4 million that I gave on the loan, right? So those are the financial considerations that you need to kind of think about. How much do you want to walk away with? And then how much are you willing to carry? You don't have to carry anything, but understand what are the tax implications by taking all the money at once. So something to consider. Partner buyouts, really, really key. A partner can be your son, your daughter, cousin, nephew, whatever, GM, right? If they're partners, that means they have to have ownership. And I feel like people have phantom ownership. Like, they're like, oh, well, Teresa, he's been here 30 years. Like, okay, did you give him ownership? Well, no. Then he doesn't own anything. It's not a partner buyout. That is literally the difference. If they have 1% ownership, it's a partner buyout. If they don't, it's a purchase. And it's a completely different deal. So owners on this call, please realize that if you don't give some ownership now, they can't do a partnership buyout later, right? Now, I'm not saying open the books, give them 30% of the profits. I'm not saying that. Give them something. And sometimes I think that that kind of, even like this emotional transition of like, okay, I'm preparing, right? I'm preparing for succession. I'm preparing my son and daughter that they need to step up. Because one thing I will tell Tony, I will tell you, just because I came from family business, yeah, our son and our daughters, they have to buy this. We started it. And that's okay. Look, it's okay to give our children some things, right? But when we're preparing for retirement, that's the mindset that I always tell my owners. Hold up, son and daughter, they're now buyers. This is a business transaction. So we need to treat it that way. We're going to do proper reports. Everybody's going to come to the table. I'm going to pull credit. We're going to go down this road as if they are not related to you. Because I think that that's an important distinction that, just because they're our parents have to prepare for retirement, right? And that
Mm.
means we need to cash them out. And that means we need to get a loan, and we need to go through the process as children of our parents, just like in the funeral industry, which we all know is an abundance amount of people are related, right? And they usually go to their son or daughter to kind of buy them out. So just keep in mind, if they don't have any ownership, it's a purchase. If they have a little bit, it's a partner buyout, and that will be going through in our case studies down the road. So
And
just something to
just
think about.
just real quick, again, this is my own personal question. There, it seems like there is a real advantage to doing a partner buyout over a cold one. And does this have to do with the goodwill piece of it, or?
Actually.
Oh,
So when you do a partner buyout as a lender, I am not going to require. So let's just use this. So Tony, let's say we have a business together. You own 10%, I own 90%. And I'm like, I'm done, Tony. Come buy me out. You are not going to have to come in with a down payment. It's that simple.
yeah.
Yep. Because you're already there, right? You're going to pay money on your own stuff. And so what we say is what the goal, or I shouldn't say the goal, what the obstacle becomes is, what is the real estate worth and what is the business worth? Because so here's another great example. If you have $5 million, let's say all in real estate and business are $5 million and you own 10%. That's $500,000. So I need 4.5 million to go away. Right? I'm not going to make you buy your part. You already have your
Right.
part. I'm going to deduct it from what everything. So what's the whole pie worth? Take out the 10%, and that's what you need to pay me, the 90%. But you're not going to participate in a down payment. That's the difference between partner buyout and a purchase. Purchase, you need to come up with some down payment. And we're going to go into that in a couple of case studies. But that's a great question.
And I'm
So
sorry, another little knowledge makes you dumb or whatever. And is there a minimum time? Like, can you give me a 1% today and then next week sell me the business, or do I have to be a 1% owner for a period of time?
2 years. Yeah. Yeah. Kind of, what's the word? Making you honest.
Yeah.
So yeah. So we're going to want you to be owning at least 24 months, 2 years. Yeah.
Thank you.
And it's from I think that there's value in it that I think owners kind of forget, in that when you give somebody ownership, give them a little bit of management responsibility as well. Like they need to understand what they're buying, right? Day to
Mm,
day. I mean, right now, as a funeral director, you're just doing your stuff, right? You're meeting with families and you go home. No, the owner, he's still there, right? So now that you have ownership, it's like, well, you know what? You're going to need to stay late and you're going to need to do the books with me, because this is what it takes to actually run a business. And I
right.
I pepper these managers. They're like, oh, Teresa, I've been managing it. And I'm like, what have you been doing? Do you pay the bills? No, someone else does that. Okay. Do you know what the electricity bill is? Do you know what the liability, professional liability, property insurance? Do you know what that all is? No. It's like, see, this is what I'm talking about. You need to get into the weeds of running a business to understand what you're buying, right? And so that's why I encourage a lot of my owners that are saying, look, Teresa, I'm about 3 years away. It's totally fine for us to have a conversation, because I want you to get them ready. So when they come to me, I feel good about it, right? I have to sell to everybody, has to answer to somebody. And I answer to somebody too, right? I know my loans are great. My book is fantastic, a great portfolio in our bank, but I need to explain myself. Why do I want to do this loan? They have great management experience. They grew up in the business, fourth generation. I mean, I can go through all those things, right? But if
Yeah.
he's been away at college and then he kind of came in and doesn't really have a funeral director's license, right? We need someone that's really immersing themselves, understanding the business and running it, semi-running it, right, with their owner so that this succession plan and transition happens organically. I hate using that word, but it's true. Like it just needs to kind of roll into it and happen nicely so that everyone is comfortable. If you're not comfortable, it's not gonna be a good deal. Yeah.
Cool. Thank you. Sorry.
No worries. No worries. So we kind of went into regards to that great question earlier for appraisals and business valuation reports. So those are key when doing succession planning is take the time. You know, everything is an investment. Keep that in mind. It's an investment. And and reports are, I mean, I know they're just documents, but documents are very, very important. Knowledge, information, so that, you know, we can't force our children to buy our business, right? But if they don't want to, that's okay. They don't have to. But then I need to sell it. So how do I take it to market if I don't really know what it's worth?
Right.
Food for thought. So, okay, let's go to the next slide. I'm really excited about getting, oh, good. Yeah, this is a good one. So these are case studies, guys. These are real deals. I put some small ones in there because I wanted you to see, even though I do a lot of large loans, I love my small deals. They're always so, they're a little bit more intimate transactions. And so this is a nice example. Father and son, he owned 31%. He started off with like 5 or 10. And then Tony, as as he's got older, he kind of started gaining more ownership. So, it's a small business. His parents don't really want a ton, but they want something. And actually they are moving to Florida. I'm not kidding. I swear they are. So anyways, long story, they already have a house there. So they want to permanently go there. So we talked about it. They did some scenarios as far as, what the appraised value was. They kind of had an idea. They didn't actually have a report, quite honestly, but you know what I think it was? I take that back. I apologize. They did. They had done a refi years back. So I think the report was like 5 years old. So what I always say to my clients is, well, you got something, right? Most likely it didn't lose money, the real estate value, it's fair to say. So I
Right.
always kind of just use the number. And then if it comes in higher, it's just gravy, right? So they're comfortable with selling it at 550. The business, they did kind of their own accountant had an accountant had done their kind of business valuation. They didn't really go down this crazy road. It's a small deal. So just being totally transparent, they had their accountant run some numbers. They felt fine with 350,000 being for goodwill. So couple things. He owned the business, but he didn't own the real estate at all. So I did, what is it, 69%, which is 242 of 350, right? Because he owns 31% of the business. He doesn't own any other real estate. And then I did a full amount for the real estate, which is 550. So something that's a little bit tricky, or not tricky, but different from the next slide you're going to see, hold here for just a bit, is there's no working capital here, because he's already a partner. So working capital, and what I mean by that, Tony, is like literally the bank accounts, right?
Right.
They're not going to clear them. They're going to everything will just kind of stay the same, except they're going to get new debt and he'll start making a loan payment to me. Dad is not involved. Mom and dad are just doing their thing. They're going to live permanently in Florida, kind of come back and forth, whatever they want. But this is an actual loan scenario. Interesting. This is an SBA loan. Right now, if you do a loan under $1 million, there's no fee. So there's no guarantee fee. There's only like title, escrow, blah, 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 that kind of stuff. So it's pretty straightforward.
Excellent.
Yeah, nice little deal here. So let's go ahead and go to the next slide. This is going to change things up. Okay. Okay, so all on the call. This is zero ownership. I get these all the time. They're like, well, Teresa, like he's my son. I'm like, I know, but it's a purchase. So we got to figure it out, right? Now, this is one where it is a family member. Actually, it wasn't a son. I'm so sorry. Let me think for a second. Oh, yeah, actually, it was his nephew. So interesting. His children didn't like no funeral, and they were thrilled with it. To be honest with you, they were like, "Oh, you know what? Our kids were really into it. We were good. We educated them. They're all doing their own thing." And I'm like, "Great." So he's okay to kind of help his nephew kind of get in there, but it's a purchase. So he had to come in with 5%, and then my seller, which would have been his uncle, he carried back 5% because I need to get to 10. I need a 10% down. And how I bridge that is I do half seller, half owner, or excuse me, buyer. So the borrower came in with 108. But an interesting thing about this is we know what the real estate value is. We knew what the goodwill was. They did make an investment. They did an appraisal. I didn't order it. They did their own thing. And then they did hire a business valuation company. They spent the money. So they knew what they were getting into. The one thing though, you see here, there's $100,000 in working capital. And I'm physically going to give them this money at close. I know it sounds bizarre because I'm taking one away, but I'm going to go give them back 100. I'm not giving them 100 because keep in mind, my seller, he's clearing the accounts. There's no money there. So you can't wait for like funerals to come in. You got to have money to get started, right? So I plug that in. We'll plug in working capital so that way the new owner is ready to go, right? Day one. He's got to transfer electrical, right? He's got to prepare for insurance, everything. It's his business. So he's got to have some working capital. So this is that scenario of what it looks like to do a purchase. This is not a partner buyout. This is actually a purchase. So I'll pause just for a second. Any questions maybe?
Yeah, a couple. First of all, Doug Gober is here, and he says that you were a real pro. So I
Doug,
figured.
stop stalking me. My friend, so sweet. What's going on?
But the question I have here is, how does my pre-need at-need policy impact my business valuation?
Question.
The policies. I thought it meant like business policy, but he means actual, I think,
Pre-need.
policies.
Yes.
Pre-need.
Yes. Yes. Okay. So a couple things is us as lenders, we're not taking that into account as far as like, we're not using it for collateral. We're not saying it's worth X, so you should sell your business for X. That's not what we're doing. But when a business valuation company is looking at it, they are kind of looking at the pre-need and seeing, okay, well, keep in mind, pre-need is future income. So as a lender, it doesn't come into play for me, right? I want to know, what is this thing doing right now? That's my part, right? In this whole play of this loan transaction. So for the BV, for the business valuation report, they are going to get into that information and kind of see what's out there. But a lot of things are really driven to with the revenue of the company, what it does in regards to cost of goods sold, how much expenses at the end of the day, what is their bottom line, right? How much are they making? And that's where a company can come into play and really kind of get into the weeds of that type of thing and bring, factor in pre-need, factor in, what are officer salaries that are not going to be there after the deal closes, right? A lot of things change. A lot of things change after at post close. So it's important to kind of know those items up front. But pre-need, pre-need is really important. And people that are not selling pre-need, we will have that conversation later on offline. You need to start selling pre-need. It's important.
The other one I have here is, what are some of the hidden things that business owners do not think to focus on when considering the financial side of succession planning?
Good one. Yeah. Okay. A couple things. Off the top of my head, I will say, what does the building look like? Right?
Ah,
A lot of the times they need a remodel. Pretty fierce. So that's one thing financially. What does the building look like? Sincerely, like, what is the life cycle still of that building? Does the roof look pretty good? What is, HVAC? All these things come into play because I can promise you the new guy is going to come in and do an inspection. So some financial things, I know it's not necessarily exactly financial, but to kind of let's focus on the question specifically for finances. So one thing is that the reporting, like, can you run reports? Do you have that capability of like literally running a report and telling you right now what's your call volume, what it consists of, what is the revenue made up of, how much did you spend in caskets percentage wise? I mean, I could go on, like products, right? I mean, on and on and on. So if you can't readily get me that information, you need to get going. You need to get that information readily available. So prepare your financing is meaning get the information. Again, we come back to that. It's so key. And if you don't know where everything is, not good, right? If you can't tell me where you are cash right now, you're not watching things. You got to know where the cash is at all times and figure out, okay, well, maybe I'm still, I don't think most people are doing paper contracts anymore, but you'd be surprised. So,
I would not be surprised.
yeah, let's let's kind of take 5 seconds on that. Is your accountant really qualified? Respectfully, are they really qualified to understand funeral? Do you have a contact management software system, right? Does it connect to QuickBooks or whatever your finance software is? Does it connect to the pre-need program that you're running, right? Are you integrated with them? Is your software integrated with that pre-need company? I mean, it goes on and on and on. So preparing yourself for succession is really like investing in technology, making sure that when your buyer comes in, you can readily show him, this is all the information I have on my business. I know exactly what's going on. This is how much I spent last year on X, Y, and Z. If you can't answer those questions, then you're not prepared, and you need to be prepared. Yeah, information at the end of the day.
A couple more.
Oh,
Um, how are children financing the down payments when they're buying from parent owners? So I guess if they're not already
not
ownership.
already. Yeah. Most of the time, I will tell you, probably 70% of the time, they're calling me. I'm showing them the roadmap. They're giving them ownership and coming back. Or,
Come back in
yep,
2 years.
coming back in 2 years. Or they've actually gotten it gifted. Yep. Yeah, many times. Many times they've gotten them gifted. Some have actually, I know it sounds crazy, but I actually actually had parents, they sold a rental property. I'm not kidding. This actually happened. They sold a rental property and gifted them the money side. It was
Hmm.
their money. It's residential property. It had nothing to do with me. So they had their down, they gifted it to them, right? But you got to be careful with that too, because we want arm's length transactions on our side, on the business
Right.
side or on the banking side. So you have to be a little bit careful, but it's all about preparing, especially if you have children that are in your business. Truly, you'd be surprised. Children's mentality completely changed when you give ownership. Now, we don't want them getting crazy and running everything. We want them transitioning into running things. And
That's what the planning's about.
that's what planning is about. Exactly. Yeah, exactly. Exactly.
And thank you, Kurt, for giving us a segue back to the presentation here, because he wants to know what's the call volume of these funeral homes that we're talking
Ooh,
about here.
this one was probably, I think this one was about 80 calls, about
Yours
80.
is small.
It's pretty small. Yeah, the one before that was even smaller. Yeah, yeah, I wanted to give the subtle ones. I feel like sometimes it's like, oh, well, she only lends money to people that have like, that need $6 million.
Yeah.
No, I don't. I'll lend as slow as 150. So I just wanted to kind of give some nice scenarios of what it would look like. But, the next slide is probably going to be the most enlightening. Let's go ahead and click into that one.
All right.
I love this slide. This was one of my best ones recently. So uh, this was a refinance. The total transparency. This guy has 7 locations. So I know it's bigger than the others, but the
More than
the
80 a
example
year.
the example works no matter what, right? It's just bigger numbers.
Yeah.
Um, so he came to me. He had various loans, not terrible loans, but some were like really small terms. Like he got a real estate loan for like 10 years. I'm like, ouch. My loans are 25 years loans. So yeah, really different. He had some seller notes in here. Um, his real estate value was really good. He'd gotten some really good deals. Values had kind of gone up. So what I did was I did 85% of the real estate value on this deal and did a loan, and I captured all the refinance. So if you look at this, his monthly payments were running him 65,000 a month. I do the refi. I literally refied all the real estate, took 3 seller carry notes that were kind of hanging out there, took those 2, plugged it into this, and brought the payment down this
A
much.
lot.
Yeah, it's crazy. So his cash flow improvement was 227,000 a year.
And this was a pre-sale thing that you did to change the values to help
So
alter the
what?
values?
No. So what happened was, so Tony, he had bought real estate kind of, little by little, he was acquiring locations,
Ah,
getting good deals. And so this real estate value was pretty good. It wasn't like crazy, but it was a nice, healthy number where his debt wasn't all real estate, and had brought down the debt, because some of these were paying off pretty quick, but the payment every month is really harsh. I mean, incredible. You can see that it was.
yeah.
So yeah, so it was really important to show him, okay, this is what you're paying now. This is what you're going to pay me with me. And this is improvement every year. But he was blown away. And it
Yeah.
really is this simple, you guys. It's a matter of just going through the exercise. Nothing costs you anything to go through an exercise. And if it's costing you, that's not the lender for you. Every lender should be able to have a conversation without charging you. So just have a conversation, see what they can do from a refinance standpoint. If you feel cash flow is a little bit tight, so that's okay. It's okay to ask the questions and say, hey, you know what, this is a lot. What else is out there? And that's kind of where we brought this access to capital with our program to say, okay, well, let's see what we can do. This one's, look at how many, this is what, 6.2.
Yeah.
So yeah, it would not have fit in the SBA box, guys. Yeah. So this was a great one. I was really happy with this one. So any questions right here?
I do have another
Oh,
question.
great. This is a great one. Okay.
What tax strategies do you recommend that will minimize the tax burden during the transition? And how long should the transition take on average once a buyer is secured?
Tax wise, that is definitely an accountant question. So you want to sit down with them and say, listen, okay, we want to sell for X before you accept an offer. We want to sell for X. What does this mean for us? And that's where it gets into, do I need to do a seller carry note back?
How much do I take and how much do I leave?
Yeah.
Yeah.
How much do I want to walk away with and go to Florida? That's the
Right.
number, right? Okay. So that's an accountant question. You kind of work with the accountant. If the accountant can't quite make sense of it, we need to up our accountant level. Definitely. But it shouldn't take you more than about 80 to 90 days tops. When you find a buyer, it should go pretty quick. I mean, 80 or 90 days is really reporting. They need opportunities to kind of get their financial information together, get the financial information from you as a seller, and then it needs to go to the bank. So two things happen, guys. I'm going to do an analysis on the person buying you. Number one, I want to make sure they're good, that they can actually pay this thing back, right? Do they have good credit? I'm not going to tell you that, but that's something that we're going to get into. I'm also going to do, obviously, the analysis on what you're selling and making sure that it can cash flow with the new debt I'm going to put on it. So we're going to take that time to do both and kind of see what's going on in regards to how are they looking. Sometimes they're an existing operation too, Tony, or they could just be buying it as their first. It's very rare. It's very rare that it's their first transaction. So most of the time they have an existing operation. So I'm going to do an analysis on what they own all by themselves, right? I don't want them robbing Peter to pay Paul. That's not what this thing will do. They need to stand on their own and the seller needs to stand on their own. And then we look at it together. But I do an analysis on each first. Does that make sense?
Yeah, no. And why wouldn't you? Yeah.
Yeah. So about 80 days or so once you secure a buyer, for sure. But the accountant should really be working with you on how much you want to walk away with, how much she wants to stand behind, the tax implications for the real estate, all that type of thing.
And this one I think you may have covered, but we'll run over it real quick. Is the process different depending upon if it is a family, employee, or outside entity?
Yeah, same. It's the same process. Yeah. Getting the financial information together, all that type of thing, running credit, looking at them personally. Yeah, regardless of who they are. Right.
Excellent.
Yeah, good question, though.
We're all caught up for now.
Sounds good. Okay, let's see with our next slide real quick. I think we've gone through our case studies. So this is kind of just getting into the program. We've kind of hit a little bit about the program, both of them that are available. SBA does great deals, really, really small deals, can do construction, working capital, you name it, debt refi. It really covers A to Z. The real difference between the SBA program and this new conventional product is really loan size. We don't do any construction on the conventional side. So we got to figure out if that's something that's really a key component, then we got to figure out how to solve for that. Maybe I do a small SBA loan and then turn it into this. It could go for various things. So the conventional, like I said, it's really for bigger loans. And we'll do 85% of the real estate and 75% of the goodwill. And that's really what's been kind of the key in the market right now is really, we solved for goodwill. And that really is what has helped us kind of be successful, quite honestly, and people trusting us with doing their financing because we are understanding that goodwill component. So here are just like the bullet points, guys. But again, just kind of keep in mind, SBA will let you do all sorts of stuff, refinance, expansion, remodeling, add a crematory put a baby building in the back, put the crematory in there. I mean, you name it. It can do all kinds of things. And it's just really more about what their needs are. And we can have a conversation about that. But, both offer fixed rate loans. If you don't want a fixed rate, we can do variable. Most people want fixed right now for various reasons. But anything right here, guys, on questions in regards to the loans, they're pretty straightforward as far as the bullets are concerned. Okay. Yeah. Great. Let's see. Next slide. I think that's we went into the program, and then So, these opportunities. They're available, everyone on this call. It's just a matter of, you have to ask the questions. You've got to get over, not asking a banker. You can ask me or anyone else. It doesn't have to be me, but really just, you want to start discussing with your spouse, your partners, whatever, what is the strategy going forward? What are we going to be doing in the next 5 to 10 years? I know it sounds ridiculous to say 5 or 10, but it goes by so fast. And if you know in your mind, I'm out 65, I don't want to do this anymore. Like, for sure, then back yourself up. Let's start planning now so that you're ready for that 65 to come, and you can go to Florida or do whatever you want, at that point, or stay in it. It's okay to stay in it. You don't have to leave. In fact, we encourage it. I love my owners to stay on for just a bit. I like the transition. I like them to be there, not meddling, be supportive, be helpful and help this transition so that the community knows, you just didn't disappear. If it's a family member, that doesn't really happen. But when it's a new owner, it is so important to stay for just a bit, help the owner kind of transition himself into the community, introduce them, right? Take them for coffee, show them around, because at the end of the day, it's not always family that buys it, right? So if you know somebody, start collaborating. I think sometimes, as owners, we're like, oh no, I don't want anybody to know about my business, especially my competition. Well, your competition might be is your colleague too, right? Yeah. And they're all struggling. Everybody's struggling, guys, but everything is the same. I promise you, they have the same struggles you do. They just act like they don't, but they do. So
I was speaking with someone this morning. Every time I talk to a succession banker, particularly, or any succession planner, it always amazes me that you're talking to people who all day are kind of worried about pre-need. Like, you have to pre-need you have to pre-plan your funeral. You never know when it's going to happen, and then they're like, well, I can probably do my succession plan tomorrow. It's funny that that connection is so hard to make for people. But there's an emotional part of it, I think.
I cannot tell you. Yeah, it's funny because especially when it's family, like, it's almost better. I just kind of say it out loud, and I think they want to say it, but they don't know how to say it. Where I'm like, okay, guys, hey, kiddos, you're buying it from mom and dad. They're not going to give you a discount because they have earned to sell their business. This is their business, and now you're buying it, and you need to respect that. But mom and dad, this is a business transaction, right? So once you get your money, you need to cut the chains. Let's let our children do what you want them to do. Don't ask them to go get a loan and then you're meddling post close. Like, be ready emotionally. If you're not ready, then don't sell it, right? You don't have to. I always tell people that you don't have to do this. If you don't want to do it, no problem. Stop, right? But I remind them, though, it's a business transaction. I kind of play bad cop because I'm the bank and I have to ask the really hard questions, right?
Good job.
It's not easy, let me tell you. But I just remind them, though, it's a business transaction. So let's all do this at a business level and that everyone's happy. If it starts to get messy where someone feels slighted, Tony, it's a mess. It just doesn't work. Yeah, it doesn't work out. But make investments, guys. Investments in reports. If it's a funeral director that you've known, he's been working there since he was 18, then let's give him some ownership. He's proven himself, right? There's loyalty, right? Hard work. So there's nothing wrong with giving a little ownership, right? Preparing. It'll help him later to get the financing he needs to pay you. So.
Perfect. Now, right now, the last question's actually for me, but as we get ready to wind up, if you have any questions, this is kind of the last call, but the question to me was, is this session being recorded and will we have access to it when it ends? And the answer is yes, mostly. So it takes about 24 hours to process. So sometime tomorrow afternoon, Everyone who registered will get an email with a link to this video, and you can share that link, and it's free. Anyone who wants to watch this can watch it. They will need to give us their email address to get past, into the room where we keep the video. It's a weird way to put it, but that's I guess the way that makes the most sense. And this will be up forever. So congratulations on entering posterity. And if no one has any other questions, we're gonna do a 3, 2, 1 count. All right. Well, thank you so much.
Well, you're so welcome.
What a blast!
Thank you for having me.
This was a good one.
Yeah, I really enjoyed myself. I wish everyone the best, and let's have a great 2025.
Thank you.
Okay.